Banks earning from your transactions, tracking every move, and surprising you with hidden fees. Does this sound familiar? Are you ready to take control and stop these sneaky drains on your finances? Learn how to spot these hidden charges and safeguard your hard-earned money with our essential tips. Elevate your finances with WealthWise Insider. Wisdom for Wealth Builders. About 100 years ago, Henry Ford said that it was probably a good thing most Americans didn't know how banks really worked, because if they did, there would likely be a huge upset by the next day. Even though a lot of time has passed since he said this, it still holds true today. This doesn't mean banking is bad. Banks are really helpful and play a big role in our daily lives. Everyone wants to keep their money in a safe place. You wouldn't want to stash your cash under your mattress or bury it in your backyard. The reality, however, is that banks make a lot of money, often at the cost of ordinary people. The banking system is complicated and strict, so some of their less fair practices stay hidden from us. No matter what, we're all affected by banks, whether we're borrowing money, spending it, or saving it. Banks have many ways to make money from us without us realizing it. This might explain why bank stocks are so popular with investors. Here are some things about money that banks might not want you to know. Number 1. Every year you're actually losing money by keeping it in the bank. You might think a bank is a safe place for your money, but due to inflation, the value of your money decreases over time. Inflation means that the cost of goods and services rises gradually. For example, something that costs $50 today might cost more next year and even more in 10 years. You might expect the money in your bank account to keep its value or even grow with interest, but that's not usually the case. Inflation in the US averages around 2% per year, but most bank accounts only offer about 0.05% in interest. This means you're effectively losing about 1.95% of your money's value each year, just by letting it sit in your account. If you want to keep up with inflation, you'll need to consider other financial strategies. Number 2. Every time you use your credit or debit card, banks make money from processing fees. Although you only pay for your purchase, the store covers these fees, usually by raising their product prices. For instance, if you buy an item for $500 with your card, the store pays a 3% fee, or $15 to the bank. This cost is often passed on to you through higher prices. Banks also earn from credit cards by offering incentives but can raise interest rates without much notice. Typical rates are around 17%, but they could increase to 18% or 19%. Many people don't read the detailed notices from banks, so they miss these changes. To avoid financial trouble, it's important to pay off your credit card balance each month. Number 3. Your money in the bank isn't actual cash but just numbers and electronic records. Banks use your deposits to make loans for businesses, cars, or houses. So while it seems your money is safe in the bank, it's actually out there working for the bank. This concept was highlighted in 2008 during the financial crisis when many people rushed to withdraw their funds, only to find that banks didn't have enough cash on hand. This situation is due to a system called fractional reserve banking, where banks lend out most of the money deposited with them. Does this mean banks are unsafe? Not really. Your money is protected by insurance and government safeguards. You can normally access your money anytime. But if everyone tries to withdraw at once, the cash isn't there. Your deposits help the bank earn more, not necessarily you. Number 4. Despite their friendly demeanor, bankers are not your friends. They might know your name, remember your birthday, and celebrate your anniversaries, making you feel special. This is all part of their strategy to win your trust and eventually persuade you to take out loans or services you didn't initially want. A banker friend once explained how he gains a customer's trust by being overly friendly and then suggests financial products like unnecessary loans. For example, imagine being talked into accepting a $50,000 loan you never planned for. This kind of friendship is about meeting their sales targets. It's not about genuine care. Bankers who don't meet these targets risk losing their jobs, which explains why they might push products so hard. Some bankers who chose to prioritize their clients' genuine needs over sales targets ended up losing their jobs. So, next time your banker approaches you with a great new offer, be cautious. Make decisions based on your needs, not under the influence of what seems like friendly advice. Number 5. Banks often make extra money from customers through foreign transaction fees. When you travel outside the US and you use credit or debit card, you'll likely face additional charges that your bank may not clearly disclose. For instance, a friend spent 15 days abroad and upon returning, discovered $105.05 in foreign transaction fees on his bank statement. Many banks keep quiet about these fees, fearing that more transparent practices might prompt customers to switch to alternatives. Some credit card programs do offer coverage in certain countries, meaning no extra charges for purchases there. However, without enrollment in such programs, like in my friend's case, you might end up paying a lot more than expected. Number 6. It's crucial to regularly monitor your bank account. You might find hidden charges you weren't aware of. If you ever notice a charge that doesn't belong to you, report it to your bank immediately. Legally, if you report an unauthorized charge within 90 days, your bank must refund the money to your account within 48 hours. Banks might not be forthcoming about this rule and could try to delay the refund process. However, you have legal rights that ensure they must return your funds. Stay vigilant and assert your rights to keep your finances secure. Number 7. Banks monitor all your financial transactions. By law, they are required to report any suspicious activities to the IRS, especially as a measure against illegal activities like money laundering. For example, any deposit or withdrawal over $10,000 is automatically reported. If such transactions raise flags, the IRS might audit your account, asking for explanations about the source of the funds and whether taxes were paid on them. This scrutiny ensures that all significant financial activities are legal and above board. Being aware of this surveillance can help you ensure that your financial dealings are transparent and compliant with regulations to avoid any potential legal issues. Always keep a close eye on your bank transactions to avoid surprises and protect your money. That wraps up our discussion for today. Have you ever encountered unexpected fees or charges on your bank statement? Share your story in the comments below to help others stay vigilant. Don't forget to subscribe to WealthWise Insider for more insights on achieving financial prosperity. Until next time, remember, smart wealth, wise future.